5 top trends to watch in 2020 in crypto and blockchain. Let me start this episode with an analysis where we are today. First of all, what are we seeing? In general, in the markets, we see a lot more volatility. Crypto's been quite bad in many ways. It's been going down, caught up a little bit overall, and is now again sort of on a bearish trajectory. I'm not going to do any particular analysis in terms of the curves or the charts here, but so that's the general picture. We're also seeing a tightening money supply, so we have some central bank rate hikes on the horizon. We do see increased inflation, quite substantial inflation in many markets, and of course we have some significant geopolitical instability. All of this adding to a picture of insecurity, volatility overall in the crypto markets, but obviously also in the rest of the markets. Now, one interesting thing maybe to remark here in this context is that crypto used to be, or one of the major plus points for crypto a year ago, or 1.5, 2 years ago, used to be the fact that it wasn't correlated with the Nasdaq, S&P 500 and other indices. This has changed quite a bit, and sometimes people wonder why this happened. And you can imagine that in the last 1 or 2 years, institutional investors, big investors, have actually onboarded quite a bit of crypto into their investments and their balance sheets. And this was still under this decorrelated state. Now, as volatility increases and pressure increases on margins, pressure increases on portfolios, the first thing that people are offloading is going to be crypto in many ways, because it is considered, still obviously considered a pretty risky investment. So in this sense, as the markets kind of go down, you see this recorrelation, I guess we could call it, between crypto and overall indices there. So that's I guess a trend that might continue in 2022, and that's sort of the general backdrop that we're looking at here. So crypto is definitely also influenced by the rest of the market and the climate and the sentiment overall. The first of the top 5 trends in crypto and blockchain for 2022 is regulation. For example, right now we have in the US, we have a lot of pending regulation that has to do with the Build Back Better Act. And in fact, there is a crypto piece built into that act, and what we call wash sales in crypto, which is sort of a way to avoid taxes or to make yourself, give yourself losses, artificial losses, to lower your tax impact. And this loophole in crypto regulation could be closed. So for instance, when you have an NFT, for instance, in your portfolio, you has a certain value, you sell it at a loss, and then you immediately rebuy this NFT, you actually can book a loss, but you still have the asset essentially, which may have a different market price or a different fair market value. And in this way, you just essentially took something off your balance sheet, which of course isn't what the regulator would like to see. So this is an example of regulation coming down the road. Speaking of taxation, you will see in most jurisdictions more regulatory approaches to taxation, how to tax crypto. And in any case, it will be very, very intelligent to be very diligent and careful in declaring crypto assets on the tax returns, because this will actually be a push. So preparing for that makes a lot of sense at this point, as we will see more of this in 2022. Is regulation good or bad? A lot of times the camps are very divided on that, especially among, I would say, crypto purists. Of course, regulation is generally seen as a bad thing. It is sort of counteracting or contradicting the trustless nature of blockchain, the decentralized nature of crypto in general. And from that sense, from that point of view, it's frowned upon. On the other side, of course, in terms of an innovation system, using crypto to build new applications and to start mainstreaming crypto blockchain applications, regulation can be very welcome as it helps to stabilize the system. It helps to create legal certainty, planability, stability. So in that sense, regulation can actually help innovation and support the adoption of crypto. Now, one issue with regulation, of course, is that in fact we do have many jurisdictions, and I think one of the problems we'll see in this context is crypto is very international. Crypto is one of the major plus points, for instance, for a cryptocurrency transaction, of course, that we can do very quick international transactions. The question here is, how do we deal with this in terms of regulation, in terms of requirements, if you are in business relationships? So what jurisdiction does apply? How does this actually work? So there's a lot of international trade law, in fact, that needs to be also applied now to crypto and blockchain questions and projects. There are certain things underway on the UN level, on intergovernmental level, but we're far from a unified approach here. So this will continue. This work needs to continue overall. My second trend for 22 in crypto and blockchain is CBDCs, central bank digital currencies. Obviously, this topic has been around for a while, and in fact, we talked about CBDCs in one of our earlier episodes. You might want to check that out to understand better what it is. So central bank digital currencies are currencies, digital currencies. A lot of times this will be cryptocurrencies actually issued by central banks. Now, this has been in development. There have been a lot of research projects, sandbox projects for CBDCs, but it looks like now we're moving into the territory of application. We know that, of course, China has already extensive field testing of the digital yuan going on, so that's something that's already in progress, but other central banks are now following suit and doing this. One perhaps notable example, or something that's been in the news recently, is a coin that's been developed by JP Morgan for Bahrain. And so here is another field test that is happening in this context. And CBDCs are something that, just to give you an idea, is something that really almost every central bank is dealing with. Just like cryptocurrencies in sort of the retail world, there seems to be a little bit of FOMO also on the central bank side. And it's also, I guess, a strategic positioning question for central banks. So we're definitely going to see this happening more and more in 2022. We have, of course, the issues, again, very similar and somewhat connected to our regulatory questions here. Central bank digital currencies, of course, run counter a lot of times to what cryptocurrency per se, or in its original thought, would perhaps want to do. Namely, just the word central bank in this context is sort of the opposite of what the crypto space believes to be one of its own tenets. So here we're going to have a lot of political discussions at the end of the day that will actually determine and have to determine what the actual role of CBDCs are. Again, in sort of the worst case scenario, and it's going to be very confusing and will bring more instability, more questions than answers. In a best case scenario, CBDCs can help make reasonable monetary policy easier and better to deploy, but in between that space, there is a lot of discussion still to be had. I just want to also point out this useful website here. If you're interested in CBDCs, there's one website called cbdctracker.org, and it gives a really splendid overview of where people are with their cryptocurrencies, where countries are, in an interactive map. So this is highly recommended for those interested in CBDCs. Here's my number 3 out of the top 5 crypto blockchain trends for 2022. And I've given it a somewhat grand title, namely Bubble Bursting Fest and the Rise of Utility. Now, this sounds like its own episode almost. What do I mean by that? So what we've seen in the crypto space, and many have predicted over and over again, that we're talking about the bubble will burst, and we're going to have just this huge calamity happening. And a lot of time in this context, crypto defenders, if you will, would say, or crypto enthusiasts would say, well, yes, but there is actual utility. The technology is sound. And I believe in 2022, we're going to see a little bit of proof for that. Let me go back a couple of months to give you an example of what I mean. In 2021, we had an art NFT bubble. Digital art, crypto art was really inflating. Prices were going crazy. And at some point, we also found that there was a correction in the market. So for pure digital art, while some projects kept going, a lot of the crazy prices that were manifesting for crypto art were not necessarily kept like that. So there was a little bit of bubble bursting going on there. We just didn't notice it properly because at the same time, the next wave of crypto NFT actually came into the space, namely the Metaverse crypto assets specifically for play-to-earn games and such. And this kind of gave you an overall impression of the NFT space kind of not crashing. But within those cycles, now we can start discerning a little bit the different ups and downs, in fact. So these things move according to relatively normal innovation cycles, hype cycles, adaptation for other technologies, and adoption into the market, and sort of maturity cycles that are not completely surprising and unknown from other innovative technologies. I think the title for 2022 is really the utility that comes to bear out here, and will before this background of market volatility and maybe a little bit higher risk aversion, investors will have a much closer look at the utility of projects. So it will be harder to fundraise for meme coins. It will be harder to fundraise in ICOs that have no real defined goal and just have basically maybe a pitch deck and some cool ideas, but not much more. So I think we will see a little bit of a cooling down, which will just strengthen the quality aspect and the utility aspect of projects. In terms of examples, I think what we're going to see is ESG projects will clearly have utility. They're predestined to utilize crypto in order to facilitate the projects. And I think the biggest one of them all, and that's kind of a silent one that's already been there in the space, is IoT integration and blockchain. IoT, Internet of Things, so essentially sensors that are going to be much more integrated into the blockchain. So data feeds, the utilization of data for different projects will definitely rise. When I say it's been silently there already, what I mean is really that we already have a lot of blockchain applications for supply chain, for example. So this is really something that we will see in 2022. And I really look forward to that because I think it will help the entire space to increase credibility and trust in a broader way. So in terms of utility, if you look at some reports here, and this is from Investopedia, more than half of the top 100 cryptos have no utility. Okay, so this is obviously something that people have been worried about and are discussing a lot. Here you have it. It's a figure, but it's indicative, of course, of this question of utility and the underlying perhaps intrinsic value of certain cryptos. Specifically, people are talking about this in the context of NFTs, of course, but even here we will see more and more projects that have actual utility in some form. And of course, utility is a term to be defined, and there's a certain flexibility there, but clearly that's a trend. Trend number 4 in crypto 2022, from my perspective, is going to be the mainstream adoption of crypto projects. Are we going to see a complete 100% adoption? No, of course not. But we're going to see a lot more mainstreaming of crypto-based or token-based, blockchain-based projects. And as you can see, I'm using this term quite sweepingly here, but I'm doing this because we're talking about mega trends. We're talking about trends here rather than individual items. However, there's always examples. One example I want to share with you is POAP, which is basically an app that's that's utilizing the blockchain to give people a marker of their experience. Let's say if you have an event, you organize an event, you can issue those little POAP tokens that people can sort of take home as a memory. It's kind of like the cryptographic photo booth, if you will. I did mention already the supply chain, and here we are actually in a territory that's quite advanced in the utilization of blockchain. because it just makes so much sense, right? It's just the integration with sensors, IoT has happened, and there are also applications now that are making the interoperability between different blockchains quite seamless, so that vendors can actually don't have to worry too much about what they've been building on, so that there is an actual interoperability between blockchains and also, of course, the individual enterprises and providers that have been using certain blockchains for their supply chain management. So that's already there, that's happening, and this is sort of underpinning, and it's a great example of blockchain technology being used for something that isn't quite visible, but it's a very broad adoption cycle that's happening right here. So with the transition of Facebook from Facebook to Meta, we saw a lot of discussions around the metaverse. It has become almost a household name now, or a household item in a certain way. So the metaverse is something that people start to be familiar with, at least conceptually, and it has certainly driven adoption. I'm very curious to see actually adoption rates in retrospect to see that for 2022, but I think we're going to see a very strong trend towards the metaverse, both on adoption on the retail side, in a sense of like people actually going in there and experimenting as consumers in the metaverse, populating it, and on the other side as well, on the provider side. One thing that's clearly going to be of massive interest is, and we're seeing this right now, is the influx of advertising, of marketing into the metaverse. This is something that has already started and is going to accelerate as more and more outlets, more and more companies, brands are forced almost to have a metaverse strategy at least, and in most cases some kind of a presence. We're seeing a strong pickup there also from agencies. It is hard to book metaverse agencies, quality metaverse agencies these days, and to actually build something, have a solid concept. This will continue both as a trend and also as a business, of course, in this context. So in other episodes we already talked about the convergence of several technologies into what makes the metaverse today possible, and obviously the integration of feedback, of sensors, like we talked about before, is going to be also something that drives metaverse development. Clearly the integration of VR headsets and other devices that are input-output devices will be making the experience much more interesting, and at the same time we're going to see a diversification of metaverses that will give certain market competition. And we predict actually a multiplication of options in the next 1 to 2 years before there is going to be a consolidation, just because people will sort of orient themselves towards something, and network effects inside of those metaverses will take over and drive adoption in those as well.